good, everybody? I just want to go ahead and touch on that topic of RSI, which is known as Relative Strength Index. I know that we mentioned about bringing this video out, so without further ado, here it is. Basically, Relative Strength Index is just a sign if a stock is being overbought or oversold. So let's say you're looking at a stock and you get your chart patterns, all this other extra stuff like that. But a relative strength index, or an RSI, is actually a technical indicator, based off of numbers, and it's just deciding if too many people are buying the stock, or if too many people are selling the stock. And so you're gonna have the range where if it's about 30 or less, if the RSI is 30 or less, then the stock is considered oversold. So it's too many people selling, so it's going to be considered a low point. And if the RSI is going to be 70 or higher, it's considered overbought. So it's too many people buying, and it might be a time that you want to go ahead and sell and get out while it's peaking. So a lot of day traders and some professional investors that are trying to get in, get out real quick, they tend to use the RSI to help them, among other technical indicators, to gauge on when to buy and to when to sell. So if you're looking at, and of course everything is going to be relative to when the time frame you're looking at. So if you're looking at a stock for the past year, if you're looking at a stock for the past 30 days, the past 3 years, the RSI is going to vary. But that's just a sign. So if you're investing in a stock for the short term and you want to be like, okay, I've been in this for about a month, let me look at the RSI for this current month, and the RSI is at 70, it might be overbought, so you might want to go ahead and get out and wait for it to come down. But on the flip side, that same stock might be at a low RSI for the long term. So you might want to go ahead and, if you see that RSI is being high, you might sell and then get back in not too long after you've sold, because you still want to hold it for the long term. So in essence, that's just kind of what an RSI is about. That's how to gauge it. It's real simple. You don't have to do any calculations. You can simply look at it, and if the RSI, as I said, if it's 30 or below, is considered oversold. So you might want to look at it and consider buying if you're not in it for the long term. Or if the RSI is 70 or more, you might want to consider selling if you're not in it for the long term.